Good day, everybody. Remember, we don't have to go to the news, which is going to be doom and gloom based. We can come right here, right to a place where we get to the markets, the metals, in a way that is positive and uplifting. Because we know that underneath the daily noise of the world, there is a steady heartbeat of resilience, and today we're going to look at that story. It was a fascinating week on Wall Street, as you know, a holiday shortened stretch that left a lot of folks rubbing their eyes in disbelief. According to the reports from the Associated Press and right here at the Wall Street Journal, the Dow Jones Industrial Average brushed off the skeptics and climbed right up to a new record high, finishing the week at strong gains, and we'll look at those in a second. The S&P 500 and the tech-heavy Nasdaq followed right along, gaining quite a bit themselves, though they're not quite at an all-time high yet. Now, why the sudden bounce in the spring of the economic step? Well, according to the Bureau of Labor Statistics, the June jobs report came in well under expectations, just adding 57,000 jobs against the 150,000 that economists had predicted. Now, a traditionalist might look at this and frown, but the markets? Well, the markets looked at the cooling data and saw a silver lining. According to analysts from Trilogy Financial, the cooling labor market takes the pressure off the furnace. It signals to the Federal Reserve that maybe, just maybe, the economy is balancing out on its own, reducing the immediate need for aggressive future interest rate hikes. It's a gentle reminder that sometimes a slowdown in one lane allows the whole highway to move a little bit more smooth. But then there are our friends at the precious metals side of things, the guardians of wealth. If you've been watching the tickers, you know that gold and silver took a bit of a breather this week. According to the data from Bullion Vault, gold wavered right around the $4,100 per troy ounce mark, which we'll get into in a little bit, while silver found a temporary home around $60 an ounce. So good things for gold and silver, which had been taking it in the shorts here recently. According to StoneX's newly released third quarter outlook, a lot of this quiet consolidation is just the markets catching its breath after an historic, breathtaking rally over the last year. StoneX points out that as equity markets rallied and the Federal Reserve's next moves remain split, some investors simply just want to rebalance their portfolios. But look closer. According to the World Gold Council, central banks aren't blinking. In fact, the People's Bank of China just recorded its 20th consecutive month of gold accumulation. They aren't looking at the microenvironments of a Thursday afternoon, they're looking at the horizon. And history shows us that true value doesn't disappear just because the ticker tape takes a summer afternoon nap. It consolidates, it prepares, it rests for the next climb. And the beautiful picture of patience is paying off. You know, every single week we sit down right here to cut through the static and find optimism in the hidden numbers. And if you find value in looking at the world through the lens of hope rather than fear, we'd love to have you walk this journey with us. Building a community like this takes a village, or in our case, an audience. The absolute best way you can help this channel grow doesn't cost a single dime. Just hit that subscribe button, tap the icon, maybe hit the like button, and leave a comment below letting us know what you're watching in the markets. It's that simple, an act that tells the algorithm there's a hunger out there for honest, uplifting financial news. And if you want to take a step further and truly back our words, consider sharing this video with maybe a friend who needs a break from the doom and gloom cycle. Your word of mouth is our strongest asset. And if you yourself are looking to buy silver or maybe some gold, you can use our APMEX link, which looks like this as a QR code, but it's also down traditionally in the description below, where at no cost to you, you can support this channel and accumulate metals in your own time. In fact, last week I got this for free, a quarter gold back. I know it's not much, but hey, it's something. They sent a quarter gold back with my order. I don't know if that's still going on, but it might be worth checking out for you. So let's go ahead and take a look at what the markets did via the newspaper, so that you know I'm not just making this up. Here we are, folks, and as you can see, as promised, the Dow Jones Industrial Average. 52,637 is what it reads, up 150 points there, 0.29%. And you can see right here the all-time high was just a few days ago, the 6th of July. And that's where we see this little gap right here. That's the all-time high. That's where we are. Not a bad place to be. The S&P 500 is next, 75, up 31 points. And right here, we're about a month out from the all-time high, which I've tried to mark right here. And it looks like we're heading in that direction. So maybe in the next week or two, we'll be right back to where we were. But as we know, the news cycle travels faster than our rationale. NASDAQ Composite, 26,281. That's up 74 points right there. Our all-time high there is also on the 2nd, and it's a little bit more of a gap. But the NASDAQ is not for the faint of stomach, as it is a little bit tumultuous in how it has been approaching its movements. Treasury, this is something I thought was interesting. The yield to maturity, as you can see right here, there's your years, how many years it takes to mature, but look right here, 5%. Things are moving like crazy in that particular area. Not that that matters much to us right now, but this is one that does. The Forex race, the yen, the euro, and the dollar all put on a graph together, and the dollar is still moving in a way that says it is strong, and not just strong, it's beating the other trade currencies in a way that many of us in the United States did not think possible. It doesn't mean inflation is still not there. It doesn't mean any of that, but it does mean that the dollar, for the most part, is stronger, and that's one of the reasons we have seen, in my opinion, some pausing when it comes to the prices in silver and gold. Not much happening internationally this week. Lots of things stayed still. We do have Brazil over here, which moved up 2.76%. That's a huge jump for Brazil. Turkey is the other one over here. Turkey, as you know, was the meeting place for some pretty important things globally, and their markets are up 1.53% there. Not bad. And over in the Asia Pacific, we have China, India, Japan, and South Korea, all over 1%. South Korea being at 2.52. So all of that's good. Now we've done that, let's get into our metals. So I'll bring out the silver and gold to be the star of the show, of course. We have silver that closed at $60.64 on the week, which is down almost $3, which is also about 5.5%. And that means that, yes, silver is down 16% on the year, or $11.5-ish. So pretty big tumble from January, but it has been holding steady for a little while, which is probably something that's soothing to most. Gold, different story. We're at $4,136 closing on the week. Year to date, it's still down $198, or 4.58%. So that being said, gold not so bad, silver not great, but they're always good things to have on hand, because in my mind these are definitely big defensive outlets for your portfolio. Not necessarily the most offensive, they don't compound anything like that, but they're always good to have in your mix. Hope you enjoyed this video, and as always, please remember to stay classy and current with the culture of currency.